being nimble, man, that's key. You can't just sit on your hands and let stuff play out. I can show people how they can improve their trading by learning from my mistakes. There are a million ways to trade, but you've got to find what works for you.
So I learned a little bit about you from just seeing your Instagram feeds and what you're about, and listening to that podcast yesterday about a bit of your journey and self-doubt and how you overcame it. Amazing. And everybody
I appreciate
should
that.
go and listen to your podcast, because not only are there great insights, but you're as entertaining as hell. So I think that you should definitely go and give that a listen. But I wanted to hear a little bit more about your background, how you got into this, and why you do what you do.
Sure. Yeah. So I started trading in 2009. So I just realized today that this is my 10th anniversary of trading, which I didn't even realize that happened. Yeah, thank you. It's been a very arduous, expensive journey. I'll tell you that.
Mm-hmm.
But for me, like, I didn't grow up fancy, and that's one of the things I want to share with people, is that you don't have to come from money, right? I grew up in a small town, rural Texas, double wide mobile home. I went to a school that there were 100 people in my graduating class. It doesn't. You can start from humble beginnings to make anything. After I left high school, I went to school at Henderson State University in Arkadelphia, Arkansas. And obviously, like, nobody has ever heard of that. But for me, it made a lot of financial sense. I knew that I could go to school on academic scholarships. And then I also played in the band. So I got band scholarships on top of that, too. So I left school with no debt whatsoever. And that's, like, unheard of these days. So that was a key criteria to me, is I don't want to start life burdened by tens or potentially hundreds of thousands of dollars in debt. So I was really happy that worked out in that way. And then after that, I went on to Raytheon, which is a big corporation. It has about 75,000 employees. And I worked there for 3 years. And in that 3 years, this story's kind of funny. I didn't realize that they had a 401k savings plan that you didn't have to contribute to. I only found out later. And when I found out, it had about $5,000 in it. And I was like, that's free money. Sweet. So whenever I started trading, like actively trading, I went to, where'd I go to? I went to Options Express, which was part of Charles Schwab. And it was really, really awful. I mean, terrible. I didn't know any better. It was just the one I started. And having learned how bad that one is, I wish I'd never started there. It was so bad. But I needed $5,000 to start that account, and the check that came in the mail was $5,000.15. And I was like, no way. How is this even possible? That's after all the taxes and everything have been taken out of it. And so I was like, man, I'm on the right track. Obviously, that's signs from above that I'm moving in the right direction. You know what I mean? Okay. So started working on that for a while, and I did that most of 10 years or so. I guess I did that for about 6 years. We're at 10 years now. And then I was at work one day, and someone had mentioned about buying a put in Deutsche Bank. And I couldn't remember anything about puts from business school. And so I pulled out my textbook. That I was a nerd, and I kept all my textbooks, and I kept them on my desk. And when I pulled it out, there were 2 tabs in that textbook. One was for bonds, and the bond pricing can get kind of wacky and unusual, so I thought that was interesting to keep. The second tab was options, and I was like, how did 10 years ago 22, 21-year-old Chris know to put this tab here? Like, it just gave me that feeling like this has got a bigger purpose around it. So I opened to that, and it talks about buying puts, selling puts, things like that. And I was like, I had no idea that all this information was here for me. And I'm thrilled to open this book and find exactly what I needed, right? So that's where it took off from there. That's where I really just started. Like, I dove deep into options. I mean, everything I could find on the internet about options, I was consuming it, obsessed with it, really. And so that's led me to where I am today. Let's see, I think it was August 2017. I started 10minutestocktrader.com, and I started it kind of as a joke, kind of a little blog, because I had my iPad, and I couldn't
Okay.
trade at work on the work computer. So I was like, I'm gonna pull up my iPad, do the trades I need, and then put it away. And I'll just call myself the 10-minute stock trader, right? And I was fortunate enough to find that that URL and bought
Hmm.
that and started making a little blog. And I didn't do a whole lot with it from August 2017 until I think it was January 2018. I was talking to my mom, and she was like, "Hey, what are you doing with your website? Do you do anything with it?" And I was like, "No." And I was like, "I feel like there's something I could do." And then I came across this guy called Gary Vaynerchuk. Do you know Gary Vaynerchuk?
Oh yeah, yeah. I love Gary.
Yeah, Gary changed my life. And I mean that in every single possible way, to tell the truth.
Hmm.
Um, he literally says you can start doing anything you want to do, and because of the internet, you can find a tribe of people that support you and are encouraged by what you do. And all it takes is you just having the guts to put yourself out there. And I was like, okay, we'll give it a shot. So I started making daily videos on Instagram. And if you go back to them, they're really, really bad. I mean,
Hmm.
some of the most embarrassing things I've ever done. Just really, really bad. I was really fat too. My face was all puffy. And since then, I've lost some weight and obviously gotten a lot better as far as being on camera. But I just started with what I had. I had these lights, I had my phone, I went out to Hobby Lobby, and my whole goal at that point was to get on CNBC.
Hmm.
So I had met with,
Interesting. Well, why CNBC?
well, that was kind of my goal. I wanted to be in the financial media. Like
Okay.
that was what I wanted to do. And so I started twittering with some of the CNBC folks, and one of them lives in Austin. His name's
Hmm.
Mike Coe,
Okay.
and he and I got to talking. I was like, "Hey, could I ever meet you? Would that be possible?" And he's like, "Sure." So I drove down to Austin. I live in the Dallas area. I drove down to Austin, and he and I got to talking, and I was telling him what I want to do and everything. And he's like, "Listen, don't go into options. There's nobody out there. There's no money there. There's not enough people watching it. Nobody cares about
Hmm.
options." And I was like, "Okay, maybe he's right."
Interesting. Oh well, when
Yeah,
did he say this? Well, when was
this
this
was
conversation?
January 2018,
January
like
of
a year ago from now.
2018.
Yeah.
Wow. I actually
So
thought, don't they have a show?
they
Doesn't,
do options action, yeah, and that's
yeah.
where I saw him on and how that whole thing started. And then I got home and I was like, wait a minute, did he tell me that because the niche is so small and he doesn't want me to take away any of his audience? Is that why he did
Mm.
that? I don't know if that's the case or not, but that's kind of how I took it. And then I was like, I kind of felt challenged and emboldened by that. Like, hey, you know what? I think maybe I could do something. So I started putting these quick 60-second videos on Instagram and just saying, like the Dow's up and the oil's down, all this stuff. And pretty honestly, it was pretty useless information, but it gave me a chance to hone speaking on camera.
Okay.
And then I got better and better. And then at one point, I decided I was going to take the podcast, the more informational part of it, and make more content for that.
Mm.
So that's kind of how I shifted, and then the podcast is really blown up. I mean, tremendously in a way that I was not expecting. Like I showed just the other day. I mean, I've got 30,000 downloads in just like 3 or 4 months. It's been unreal, and that tells me I'm doing something right. I mean,
Mm.
I'm following my passions. I'm doing the things that I love to do, sharing what I love to do, and trying to help other people learn as best they can. So it's been an incredible experience so far, and we're just getting started.
Yeah.
I
Well.
uh, I,
Oh
I
well. When
can't
you find your
wait.
gift,
I
well,
see
when you
several
figure out what
comments
your
coming
gifts
through. I
are, yeah, man.
appreciate everybody there.
Yeah, there's a lot of people coming in. Doug, welcome. Y Options, welcome. Paper the Talk Gang, welcome. Everybody that's here, welcome. And yeah, well, we do want to get to your questions too. So like, if you have anything while we're sitting here and we're talking, just drop it in, and we'll do the best that we can to answer or whatever you guys want to talk about. I just wanted to say too that identifying what it is that you're passionate about, like you obviously found that, and then going out and doing it, and the big thing too is giving value, right? Like, how do we give value? It's figuring out what our gifts are and then spending the rest of our life giving it as much as we possibly can to
Absolutely.
others. And it's amazing that you're doing that, and that you're out there and you're helping people, and that's what it's about.
Yeah, I appreciate that. It's really funny because when it boils down to it, right? It's me sitting in an extra bedroom, talking to my phone, talking to myself. And I deliver enough value, thankfully, that people actually care and people take that and, make actionable
Yeah.
decisions and hopefully improve their lives because of it.
Right, and
And
it
that's one of
doesn't
the
take
reasons.
much.
Yeah, and I don't mind sharing my failures. I feel that humanizes me in that way. Because I wrote a few talking points down here, and I am definitely not the guy who's buying a Lamborghini or renting a Lamborghini and driving around saying, "Bro, look at me! I got all this money. It's awesome." I'm not that guy at all. I drive a Mini Cooper. Very open about that. I love my Mini Cooper. You have no idea.
Mm.
But it's crazy because I I just talk to myself, man, and people like it. And I'm the guy who gives proof of what he does, right? I mean, all of my trades are out there. Like if you go to 10minutestocktrade.com and get a free access plan, you can see every trade I put on this year and how they have or haven't profited. And having that transparency, I think, helps a lot too. Because a lot of people, they talk about, oh, I made 15,000%, come join my website, whatever. But, until you actually can see the accountability there,
Mhm.
it makes a huge difference, right? You got to be transparent. You got to let people learn from your mistakes. I take that very personal, that I can show people how they can improve their trading um, by learning from my mistakes, right? I don't want people to make the same mistakes I did. I don't want people to go long gold and then watch it drop like 30%
Mhm.
over the summer and be the bag holder of it the whole time. That was the worst trade I've ever made. Was this summer I went long gold and gold just plummeted. And the biggest mistake that I made from that is not exiting my position, thinking I knew better. It's coming around. Don't worry about it.
Mhm.
Day after day after day, it's moving against me. And I didn't, at that point, I didn't carry stop losses. And I learned from very expensive lessons that you need to have stop losses in place. There's no point in thinking that you know better. And there's certainly no point in deciding that you are going through the start of the counter trend rally. That's another thing I learned too, right? Trading with the trends is a whole lot easier than trying to pick a top or pick a bottom and then play against that. So yeah.
That's great. I just put out a video 10 minutes ago about trading with the trend and finding the dominant trend, and you want to make sure that you're in that direction. It just makes life a whole heck of a lot easier, and it doesn't matter
Oh
if
yeah.
you are a day trader, an intermediate term, even a long-term investor. Like, you could find the dominant trend and go with that, and it will help you.
Yeah, for sure. So I mean, I love sharing this kind of stuff with people, and that's why I do it. I get up every day and put out the podcast every day, and it's been well received, and I really appreciate all the support that people give me for that. I had no idea it'd be as popular as it is when I first started at all.
Mm. So, so what are you looking at when you're trading? Someone put in the comments that their trading game improved after not listening to the business news.
I
For
agree with
me,
that.
like, I agree with that too. What are you looking at?
I keep it super simple, right? So I use Tastyworks, and I recommend people also use Tastyworks, and we can talk about that later. I've got a whole section I want to talk about on
Okay.
that on. But when I go into Tastyworks, I do a couple things. I first filter on implied volatility rank. Now, whenever
Okay.
you're trading options, you want to sell things that are expensive, obviously, right? You want to sell the Lamborghini. You don't want to be buying it. If you could buy it for the price of a Hyundai, you want to sell it for the price of a Lamborghini. So you want
Mm.
to sell things when they're expensive. So by showing implied volatility rank, that gives you an idea of how expensive an option is. So
Mm.
then whenever I find those, I really concentrate on the most, well, first off, most liquid products. Like, that's key above all. Second, highest implied volatility rank.
And how do you define liquidity?
Oh, I need to be able to get in and out without losing money. And you can look at that on an options chain by the bid and the ask and the difference between the two. Some stocks like Amazon, they're going to have a pretty wide bid-ask spread. But if you make a spread out of it, so buying an option, selling an option, something like that, you can hit midpoint pretty well. Whereas things like SPY, that's the most liquid product in the world, you're going to have 1 cent wide markets. So I have a watch list, and it's pretty much just ETFs. And I just look at the most liquid ones, and then I look at first the highest implied volatility rank. Now, let's say I have decided I want to trade something with a high implied volatility rank. And for example, we use ABC stock. I'll go into ABC stock's options chain. And the first thing I do is I look at deltas. Delta being the approximate probability of profit, or the approximate probability of it being in the money. Whenever I look to sell an option, I go at least 70% probability of profit. The reason being is that I don't have to worry about it. I did an analysis on my portfolio last year, and I found that iron condors, which is where you sell a put spread and a credit spread, both out of the money, it's a neutral trade. It can go up or down or stay where it is. What I thought was a great trade, and I had been putting it on for a long time, it was my favorite trade, till I found out that it was an overall winner in percentage winners, right? But overall loser in the amount of dollars. And I was like, this is really unexpected. I did not anticipate this to have a 70% win rate and a negative, 50 average return. I was like, I need to change things up. Yeah.
So why did that happen?
Well, a lot of it had to do with the fact that a couple things. Trading neutral is great, but if we're talking about trends, if you're getting into trends, you're blocking off one end of that trend there. That trend may run forever. And if you decide to put on a neutral trade, boxing in the stock price, you're going to have an issue. So for me, the first way I adjusted that was I took off the other end of the spread. So rather than doing the puts and the calls, I'll just do the puts, or I'll just do the calls. I only trade one-sided trades now. And that's the reason why, is because I don't know. I want to be on the trend, but also don't want to box in the trend. If it decides to keep going, then I've got a losing trade when it could have been a great winner. So then on top of that, I was of the school of, if you have a defined risk trade, and this is going to go against a lot of people who have followed me in the past and follow other traders and things, but if you have a defined risk trade, the traditional sense is to let it play out. Let's say you have a $5 wide spread. You've taken in $100 in credit, kind of like you were talking about with your Netflix trade, right? You're looking at a $5 wide put spread, and you're taking 50 cents of credit. What I would do in the past, I don't anymore, is I would say, I'm going to let that thing go. And now if Netflix decided to fall down and just really melt down, I'm just going to hold it. It's going to be great. If my short strike gets tested, I'm going to put on an opposing call credit spread, and we'll call it an iron condor. And it's going to continue to fall. And then by the time I get done, I may have taken in 75 cents, $1 in credit, but I've now lost $400 because it's a $5 wide spread. I don't do that anymore. There's no reason whatsoever. If a stock has moved against you, if it's moved against you 5%, and these are risk levels you got to figure out. If it moves against you, stop. Exit the trade. Don't hold it. Don't try and adjust for it. That's the other thing that I got really frustrated with myself by. It's like I would make adjustments, and then the adjustment would end up being a loser, and I'm like, this is stupid. I'm really wasting my time. I'm wasting a lot of stress, and I'm not making money. I need to change. So now I have a stop loss. My stop loss is 100% of credit, right? So on your Netflix example, if you put on a $5 wide spread, taking in 50 cents in credit, if it becomes a loser by $50, I'm out. Obviously, I'm wrong. I don't need to continue to show how wrong I am.
So are you taking off the entire
whole thing?
Credit spread?
Done with it. Yep.
Interesting. So you actually sparked another idea for me, like how I've been using options, and this is pretty good too, like putting on that other side of the credit spread like that. So if it's falling, to not only like cover that, but like potentially like add on the call side of that spread, because now you're going with the dominant trend, like it's falling, collapsing, and
Right.
you have that
Okay.
call credit spread up there.
So the way I look at it, right? So let's say you put on your Netflix trade. I want examples. I don't have anything around me I can use as examples here. Here we go. Use this pen. I have a whiteboard for my table, so this is from the whiteboard, right? So let's say this end, this is not a good choice. Let's see. Let me get a different color marker here. It's art class with Christopher Uhl. Okay. All right, so imagine that this is your trade. This is the losing end. This is the winning end, okay? So you've put on your Netflix trade right in the middle, okay? Now, if it decides to move down, you have room before it shows even much of a loser at all. It's really only until it's going to get close to your short strike are you going to show those bigger wins, or I'm sorry, bigger losses, like what I'm talking about, like 100% of the credit, right?
Right.
I mean, if it's anywhere in this white line here, you're going to be okay. And by okay, I mean like it may show a loss of $10, $20, $30, whatever. But it's only until it hits that short strike are things really going to start falling apart. Now, whenever that happens, you can take an opposing spread and you can make it into an iron condor. So now you've boxed in your trade, okay? And I mean, iron condors are great if you feel that it's going to be below this price and above this price.
Right.
It's got to stay in this range. Now, that's the first way you can adjust a put credit spread gone wrong. Now, let's say, for example, it's gone further in the money. You're still holding it. You've put on your iron condor. You can now actually move your call credit spread down. You're not taking on any additional risk. You're actually offsetting some risk. And you can move this down to make an iron butterfly. But on top of that, because you've made an iron butterfly, the only way it's going to profit is if it hits your peak of the iron butterfly.
And can you explain briefly what an iron butterfly is?
Yep. Hang on. I'm going to draw on my iPad. Give me a second here.
Amazing. And
I love this stuff. I don't know if you can tell.
Yeah, me too. And welcome everybody that's jumping in. Y Options asked, how's the Netflix trade going so far? It's going great. So I have two of them on. Well, one I sold a put credit spread at 280 last week. That one's obviously I'm going to have a full gain on that one. This morning I sold 330 put credit spreads, and those have been working out as well. Those expire on February 1st. So we'll see. But so one of the ideas that I've been using, and so far it's been effective, is I'll treat it as both. So I'm selling the credit spread, but if it breaks, then I'm treating it out as a breakout trade, and I'll trade it intraday. So like I'll cover the short side, and then I'll let the long puts go, and then I could potentially make a lot more.
Yeah, I heard you explaining that, and that I had not heard that strategy before.
There's a lot more people that are a lot more experienced than me with options, even in the New York City Investors Business Daily meetup that I'm a co-organizer of. One of the guys that's been there, that he's been one of my mentors earlier on for years, and he's been doing a lot with options and iron condors, reverse iron condors, trying to teach me about this stuff. And then I told him this strategy, and that was foreign to him too, where it's giving yourself multiple ways to win. It's you expect it to be in this range, you expect it to be above or below a certain range, but if it does break out, then you cover and let it go. And
listen, that would have worked great for me this summer with gold, because that was really stupid, and I left shit on. Pardon my French there. I left stuff on that was absolute garbage, and if I'd adjusted it in that way, I think that actually would have worked out pretty well for me.
Yeah, earlier this month, with both Netflix and Ulta, when both of those broke out initially, like I started with the call credit spreads. When those broke out, quickly covered the short call, let the other ones run, and then all of a sudden, like you're up like 500, 1,000%, and okay, like this is working out pretty well. Like the thing with it is you've got to be very nimble. Like I treat it as a day trade.
Yeah.
So when it does break out, I'm looking at 5-minute charts, and I'm waiting for a consolidation on the 5-minute chart, and then that'll be the thing where I will raise stops and treat it like a regular trend trade.
Yeah, that makes sense. Yeah, I like that idea. Especially like making it into a day trade. That makes a lot of sense. And being nimble, man, that's key. I mean, you can't just sit on your hands and let stuff play out. And that's part of trading is learning from your losers, right?
Yes.
So
and
what I was
knowing
trying
what
to,
you're capable of too.
yeah, for sure. So what I was trying to show you earlier, let me see if I can get the
let's
glare
see.
off of that.
Yeah, that.
Okay, so
It's
imagine this is your
looking
put credit
pretty
spread, right?
decent.
All right, so that's your stock price. This is your puts, okay? Now, if it starts moving this way,
Okay.
there we go. Okay, if it starts moving that way,
That's amazing.
oh, thank you. If it starts moving this way, you got problems, right? It's eventually going to be breaking your short strike and potentially turning into a loser. So the way to offset that is to make it an iron condor and essentially box in the trade, okay?
Okay.
So we've done that. And then if you want to go even a step further, let's say that the stock price is now at your short strike. Things have really fell apart. You can put on a, essentially, hang on, let me try something. It essentially will look like this with your iron butterfly. So you've got a triangle, essentially a bottomless triangle, and it's only going to profit in this range right here. But if the stock's already moving this direction and it continues to go down, it's not going to come back. I mean, really, you've taken in as much credit as you can, which is the idea. But at this point, like, why? Just cut it. That's what I've learned, and that's it's counterintuitive to a lot of what I had learned. But experiencing it and watching it fall apart and being like, I'm stuck and I'm not making things any better, that's where I decided to adapt and to just really, like, if it's lost 100% of the credit, I'm wrong, I'm just going to throw it away. It's fine. But the deal is, right, you have these high percentile win rate trades on, and you want to just stack those. And for example, if you've taken in $50 credit on your Netflix trade and you get one wrong, it's going to take you, how many more times would that be? 9 more full winners to make up that $450 loss. It's $5 widespread. You've taken 50 cents of credit. Your max risk is $450. You've decided, because you didn't know any better, you're going to let it go all the way to a max loss of $500 or $450. It's now going to take you 9 more trades to get back to even. And that's if they're all full winners. It just doesn't make sense to me. So rather than that, let's take it off at 100% of credit. So now if it is a loser of $50, I'm done. But I also still am going to put on more high probability trades. So it's not going to take 9 more trades to get back to even. It's only going to take 1.
All right. That makes a lot of sense. I'm curious, are you consulting charts or as well, or like,
it depends.
Are you just looking at, okay.
So I used to not look at charts at all, just really base it on options pricing, because with the delta, you can get an idea of what the expected range would be, and you can set up a 75% probability of trade, long or short. I mean, you hit the 25 delta call, that's a short trade, that's still got a probability of profit of 75%. You hit the 25 delta put, it's still got a 75% probability of profit. Either one of those has the same probability of profit. You're just taking a market posture of long or short.
Interesting.
So that's the way I had looked at it. But then, as I was talking about with gold, I was trying to pick a bottom, and it never bottomed. And really, all I had to do was look at that chart and see this giant wave down and say, either I'm going to participate in the wave down, or I'm going to just not play this. There's no reason to decide I have picked the bottom. It's only going to go up from here. I mean, the stupid amount of ego associated with that really checked me hard. Like I say, it's the worst trade I've ever had, and I just put it on last summer. And right before that, I remember I was messaging some of the platinum members at 10minutestocktrader.com, and I was like, hey, things are going great, hitting all-time highs, and Then all of a sudden, I put on this gold trade. I went on vacation, and it was stupid, really, really bad. So yeah, I do look at charts now. I don't become obsessive about charts. I know a lot of people put on like 27 indicators, want to predict where everything's going. But with options, you don't have to predict. You just have to be ballpark right, which I love that.
Yeah.
Now,
yeah, I think that well, when I'm looking at charts, I'm not trying to predict anything. It's more about like identifying the trend, identifying the dominant trends, identifying where support and resistance are, trying to find a change in character where volatility might be expanding or contracting. And it's, well, when we start to see like that narrowing of volatility, that we tend to get those explosive moves one way or the other.
Yeah, that makes a lot of sense.
So
and I
I'm
know a
kinda
lot of
curious.
people put a lot of criteria in like bull flags and pinnets and things like that. It's just not something I've ever found to be useful to me. I'm not saying other
Interesting.
people can't trade that. It's just not what I've found.
Yeah, no, like it's all about figuring out what's useful to you
Oh yeah,
and using that.
no
Right?
doubt.
Like there's a million ways to trade, but there's going to be just a handful that's going to be the right ones for you.
That's a really good point. You know, there are a million ways to trade, but you've got to find what works for you. If you don't want to be stuck staring at a chart all day, don't trade based on charts. You know what I mean? And that's my whole deal with 10minutestocktrade.com. I want to look at this as little as possible and do the best I can with that, because I got a life to live. I got businesses to run. I'm trying to make money in lots of different ways, and one of the ways is trading. And I don't want to be stuck staring at a screen all day, which is why I just do the iPad. I mean, that's kind of part of the reason for that.
No, that's great. So you're trading off the iPad?
Oh yeah, everything.
I love that.
Oh, I run all of my business from my iPad. Yeah.
That's great. So like so many people think that to be a trader you need to have like 10 different screens all over the place. Like no, not at all. Like you can trade off your phone.
Yeah,
You can trade off of an iPad.
Yep. Yeah, and it's just from experience too. You know, the longer you're in it, the more you find things that do and don't work for you. And man, I've tried my hand at day trading, and I don't like sitting there sweating and worrying and obsessing over every tick in the chart. And then when I started trading more longer term options trades, wherever they've got like a 70% probability of profit or greater, I don't have to worry about it. 7 times out of 10, there's nothing to do, which I love that.
Can you define what you mean by long term?
Longer term meaning 35 to 65 days. I found less than 35 days to be problematic because you can't get as far away from the money as I like to be. I found
Interesting.
Longer than 65 days, the time decay doesn't work as fast, and you're holding on to trades a lot longer than you would want to.
Interesting. Just the wheels are turning for how I can
for sure.
apply this in other accounts that I have. Like I've just been using options in my income generating account, but I have an intermediate term account, and I have longer term accounts for my daughter. She's 3, and for my own retirement that maybe I may want to start incorporating.
Hey, there you go.
Some of these longer term options plays.
You know, I can't think of an easier way for someone to get started than covered calls. I mean, if you are already into buying stocks, you're familiar with how to buy stocks. You know, it's only going to profit. Like if it's a $100 stock, it will only profit if it turns $100 1 penny or greater. Now, with a covered call, you could sell a covered call at like the 30 delta, and you could do it for 45 days, 30 to 45 days out. And then every month, if you sell that, you're going to be taking in credit. So if it's a $100 stock and you take in $1 of credit, you've actually just decreased your break-even point by $1. So it's now a $99 stock to you, even though it's valued at 100. And what's great about covered calls is that if it goes up to that 30 delta strike or above, you get to capture all of those gains in the stock price. It's only when it achieves greater than that, if it's a 105, it's only when it's greater than a 105 call will your call that you sold become an issue. But 70% of the time, because it says a 30 delta right there, it's not going to be an issue. And it's not even going to be an issue because you get to keep all of that profit. So a covered call is the easiest place for someone to start, really.
Interesting. Yeah, especially like if you have one of those bigger, longer term accounts for your retirement and you're managing like your own IRA, right? Like, could you do this in an IRA account?
It depends on the broker. Some allow you to, some don't.
Well, can you name one or two of them that do allow it?
Sure. So I was mentioning Tastyworks earlier. That's the platform that I use. I do have a contract with them. Full disclosure. My contract with them is essentially a marketing agreement. The reason that came to be is because I was talking about them on my podcast. They got word of it, and they said, "Hey, since you're talking about us already, let's make a mutually beneficial relationship here, and we'll send you some business. You send us some business." So that's the disclosure on that. But it is the platform I use. If you ever watch my podcast, it's the one I'm using in the podcast.
Okay.
One of the reasons I use them is because they use high frequency trading technology. And if you aren't familiar with that term, essentially it means that they're going out there in microseconds from the time you place your order and getting those shares. Now, there's a whole book on it by Michael Lewis called Flash Boys. That book is fantastic. Absolutely fantastic.
Totally agree.
Even in audiobook form, that's how I consumed it. Incredible. Talked about how they're digging lines through towns to get, shave microseconds off getting those shares. But the way it works is if I'm going to go buy a stock for $100 and no cents, like exactly 100, I'm going to put my order in. It's going to go off and hopefully get filled at 100. But if it's possible to buy it at $99.99, your broker on your behalf should buy that for you at $99.99 and give that to you for $99.99. It improves your price. The way high frequency trading works is that they're going to go out there and they're going to find it as fast as possible for the best price as possible and give that to you. Now, one of the ways Tasty works in that way is that they use high frequency trading technology to benefit the consumer versus benefiting the broker. So I think I heard a stat that over 50% of the orders that get put onto Tastyworks are price improved. So if I'm selling a call for $1, maybe I'll actually sell it for 103. So I've taken in 3 cents a credit. I didn't have to do anything. Now you've got other platforms that use this against you, and I don't think most people are aware of it. So like Robinhood, and I know you've talked about Robinhood in the past, which I don't know if you're aware of this. They actually use high frequency trading to benefit them, which is why it's free, but not you. So if Mike's going out there and he's buying stock at 100, and Robinhood can find it for $99.98, they will buy it for $99.98, sell it to Mike for 100, and they're going to keep the $2. And that's how they operate a free platform. And I don't think most people know about that. And that it works against you in that way, because you could have been price improved, but because of their technology, because it's a free platform, that's how they make their revenue out of it. So that's one of the reasons I use Tastyworks. Absolutely.
So you're saving on the transaction fees, but you're giving up the price improvement.
Exactly. Yep. And it may be significant. I mean, if you're buying 100 shares of stock and it's 2 pennies, that's $2, right? But if they're doing that across 50,000 accounts within 4 seconds, they're raking in the money. And all those 50,000 accounts just lost out on all those potential price improvements.
So maybe for a smaller account, Robinhood might be the way to go. For a larger account, Tastyworks.
I don't know. I still like Tastyworks. And the reason being is because their commission structure is $1. Like if you're going to sell or buy an option, it's $1 per leg. And you may be giving up more than that on Robinhood and not even realize it.
Interesting.
Yeah, so that's why I recommend them. First off, their commission structure at $1 per leg is pretty much unbeatable, and that's to open, and there's no cost to close. So it truly is $1 per leg. Then if you're doing more than 10 contracts, it maxes out at $10. So let's say Mike's feeling really good on Netflix. He just bought 100 calls. He's only have to go and pay $10 on that. It's pretty sweet.
Yeah, it is.
So I know it sounds like a huge commercial against it or for them, but that's the deal, right? It's Tastyworks, and So if you use the code 10minute, 10MINUTE, I'm actually going to take care of you if you do that. And I wanted to share this with some of your people today because I really feel so strongly about Tastyworks and working together and making our relationship better, that if people sign up using the code 10minute, 10MINUTE, I'm going to give you a free month of the platinum membership at 10minutestocktrader.com. And that's $150 value right there.
Oh, that's great.
And all you have to do is set up an account, right? I mean, it's a win-win for everybody. So whenever you do that and you use the code, you get $150 credit essentially for 10minutestocktrader.com. And I will send you, as part of the service, we use a WhatsApp platform. And so it basically texts people on WhatsApp whenever I make a trade, opening or closing or whatever, so that they can be a part of it if they choose to be. And then they have access to the full portfolio that I keep online all the time under the platinum membership there. So they can see what I have on right now and decide if they do or don't want to be a part of that. Then every week I do a strategy review video. So I'll send you an email and it'll talk about what's in the portfolio, what I'm looking at, and how we're going to be managing these if anything comes up. Then on top of that, I'm going to sweeten the deal just a little bit.
All right.
This is my favorite book of all time. It's called The Success Principles.
Okay.
If you don't have this book, you want this book. Trust me. Because in the preface, not even inside the book, it talks about how you can double your income and double your time off within 2 years. I have a lot of things that I've noted in this book.
Hey, yeah, seriously.
Yeah. I'll send you that book for free. I literally will buy that book and I will send it to you. So now you've got a free month of service on me. You have Tastyworks, which is the best platform in my opinion. And I'm going to be spending money on you so that you can improve, hopefully, your life. I mean, not just in trading, but in general. So that's the end of my infomercial there. I really love Tastyworks. And then, if you sign up using 10minute as the code there, I'll take care of you that way. So
that's amazing. That's an amazing deal. I think that people should go and take advantage of that. And you know what? Like I'll make the pot even sweeter. Like for anybody that goes and tests this out, one free coaching session with me on me. How about that?
Well, geez, I need to take advantage of that too.
There you go, man. And that's been great too. Like being on this platform, being able to help out people from all across the globe. I had a coaching call with somebody yesterday from Portugal. The other day from South Africa. It's amazing to be able to connect with so many different people in so many different places, and like.
I agree with you so much on that. Like I had no idea the reach of social media when I started, or the reach of the podcast or whatever, because like I had text message based servicing on the website, and then I started branching out and to doing this, and I was like, wait a minute, I now have international clients. I have to accommodate them. So we moved into the WhatsApp platform. It was the first time I ever used it, and it was through suggestions from the audience essentially. Like, what platform do you guys use out in Argentina? Oh, we use WhatsApp. Yeah. Okay, cool. We'll do that. So yeah, it's incredible the reach that you and I can have. It's unreal.
Yeah, it's great. It's great. If there's any questions that you guys have, I'm just going to scroll through some of the questions. I know that both Christopher and I want to get to as many questions as we possibly can.
Absolutely. So while you're doing that, I also I had an artificial intelligence trading firm reach out to me, and I'm sure you've had people reach out to you, and they're like, "Oh, I know exactly what the stock's going to do. Trust me, blah blah blah." And I was very skeptical whenever they reached out to me, and then they showed me their platform, and I was like, "Holy crap! You guys are going to print money. It's unreal." So it's still in development, from what I understand. It's going to be rolled out soon, and I'll share more about that on the podcast. But I'm already putting that on for my own portfolio, putting on trades for that. It's scary how well it works. Like I say, it's going to be printing money, and you're going to want to take advantage of this, Michael, whenever it comes out, because it's
all right. What is it?
It's an artificial intelligence firm. Essentially, they put out a watch list, and they say, for example, we traded Walmart yesterday, and they're like, Walmart has a 60% chance of hitting 97.21. And the high of Walmart yesterday was 97.21. And I was like, holy cow. It's unreal. So they're getting me a discount code that I can share for that too. But that one I'm super excited about because you could really make a killing once this starts working and people start taking advantage of it. So yeah, that one I'm excited about. Super, super. Like taking the guesswork out of trading is their whole mantra. So we'll see.
Yeah, for sure.
So what other do you? I trade primarily options, like 95% options. What about you? What do you trade?
So for my income generating account, I'm using almost exclusively options. It's I'd say 95% options in that account, and that one I'm doing options that I'll put on a trade with options that expire in 2 weeks, and then that's where I'm using that breakout strategy. So I'll look this weekend. I'll look for options that expire in 2 weeks, and next weekend in another 2 weeks. So that way I'm getting paid every single week potentially. Then in my intermediate term account, those I'm doing more the stock trades, stocks and options, stocks and ETFs. And with this other strategy that you just turned me on to, I'm going to give that a shot in my intermediate term account and my long-term retirement account. In my retirement accounts, I've been looking for more of the long stock trades. So like things that are like pulling in back to say like the 200-day moving average or something that's finding that long-term level of support that I'm bullish on for X, Y, and Z reasons. And it's not just technicals. Like I'm looking at fundamentals too. I like stocks where it has increasing earnings, increasing sales quarter after quarter, showing that kind of growth. If you're familiar with Can Slim, have you ever heard of Can Slim or investment?
I think I've talked to Slim once or twice. Yeah.
So that's how I got my start. That turned me around from being a losing trader into setting me on the path to finally being consistently successful. Yeah. This book, How to Make Money in Stocks by William O'Neill, and he's the one that founded that newspaper, Investors Business Daily. And so what he started looking at was what are the common things that would cause a stock to move from go up 100% or 200%, 500%, 1,000%, like your Walmarts of the world, your Cisco's, your Tasers from back in the day. And what he found was that they had these common traits of current and annual earnings and sales, continuously going higher. Something new about the company. It could be a new product, a new service, new management. Then the supply and demand of the stock. So that's when we're starting to look at the chart, because you could see when institutions are piling into a stock based on the price and volume action. It's real hard for institutions that are moving billions of dollars to hide their movements. It takes them weeks and sometimes even months to accumulate a position. And when you see those big volume spikes, that's a sign of those institutions making their moves. So we want to be aware of that. And that's the S. Then we're looking at stocks that are leadership. Now, right? So we want them to be leading the industry that they're in and the market higher. So we're looking at relative strength. And is the relative strength outperforming say the S&P or the NASDAQ? I tend to focus on is it outperforming the S&P? And that's real simple to plot on a chart too. The charting service that I like to use for this purpose is called TradingView. One of the things that I love about TradingView is they let you program in your own codes, and they let you do this for free. So I'm looking at this stock versus the S&P 500. I'm looking at this stock, or I'm also I have a script that flags certain distribution days, a distribution day count. the number of new highs versus new lows being made, and it's all like programmed in, so that way it shows it on the chart as we're moving along.
Mm-hmm.
And so leadership, institutional sponsorship. So we want to see like the number of funds that own a stock continue to go higher and higher, because that's showing more demand for the stock, and we want those big hedge funds and mutual funds of the world to be piling in, pension funds. And then the M for CAN-SLIM is the market, the overall market condition, because most stocks are going to follow the overall trajectory of the market. Leading stocks will lead, but most stocks will follow the overall trend of the market. Right. So that's what CAN-SLIM is. And when I finally discovered that was the first thing that really resonated with me, and it made sense. And then I started diving deeper and deeper into that world and the different ways to apply it, and how to make it work for me. When I started going to some of IBD's advanced workshops, like they have a master's program of these workshops, and they're taught by O'Neill's portfolio managers. So there's two guys that were running the show back then. One is Mike Webster, and this other guy is Charles Harris. Both of them phenomenal traders, but they trade his system in polar opposite ways. One of them is going, Mike is going for the home runs the same way as Bill would do. So like buying out of like an IPO base and holding it for the duration of the move, and trying to capture that 200, 500% gain, whatever it's going to be. And then Charles was more of a swing trader, going for those singles and doubles and just compounding those 15% and 20% gains like over and over and over again.
Right.
And both of them were able to generate 1,000% returns in a year, but it's figuring out like what the style that's going to work for them. And that was something that resonated with me too. Like there's like so many ways to trade this stuff. It's just figuring out like what's going to work for me, and how is it going to work for me, and to continuously review that process, because as life goes on, things can change.
Yeah.
For example, like I was doing exceptionally well for like a span of about like 6 years, right? Like after I found the system and was trading, and with my first business I even launched, like I had my own a blog that I started called chartyourtrade.com. That turned into a business. That business was sold last year. Started this new business, Mara Wealth. And the thing that had changed 6 years in was my daughter was born. And I was still trading the same way, and my equity curve was going like this. And then after she was born, my equity curve started to look like this, going sideways. And it's like, well, what's going on? I thought that I was trading the same way. But what I didn't realize was major life change. You're not trading the exact same way. You're not putting in the same amount of time. You can't put in the same amount of time. For me, to be a great dad meant spending a lot of time with her, and to be up late at night and helping to take care of her, and being there for her. And I was getting very stressed because I had my trading, and I wanted to take care of her, and I couldn't simultaneously do those two. So what I needed to do was eventually figure out, how can I both be a great dad and
Okay, so Instagram decided to cut out on us at the last second while we were just getting ready to wrap up that conversation. Let's bring.
I realized I actually hadn't told you the answer to your question. Actually, Tastyworks does allow you to trade IRA options.
Oh,
that
great.
was how that whole segment got started. And I got to thinking, I actually didn't tell him that. So yeah, there you go.
Amazing. So I will definitely give that a shot.
Yeah. Hey, make sure you use that code.
Yes. Yeah, that's right. 10-minute.
So yeah, thanks a lot, Michael, for having me on today. I know Michael and I connected over Instagram, and really appreciate it. And in fact, I was sending out an update this morning, letting the 10-minute traders know that I'll have several podcast interviews coming out soon. and I saw you on Twitter. You've got like 30,000 followers on Twitter. I had no idea. I'm
Yeah,
like
yeah.
a tiny baby on Twitter. I have 1,600. It's crazy.
Well, well, we all start somewhere. You
Yeah,
have
there you
like
go.
8,000 something on Instagram. I just started on
They're all
Instagram.
fake. They're all bot. They're all fake. No, just joking.
Yeah,
No,
they're like my
actually,
Twitter followers.
yeah, there you go. I got started in February last year because I read this book, Crushing It by Gary Vaynerchuk.
Mhm.
And one of the things he talks about in here is go to a platform that's not saturated. And I was on Twitter just basically watching other people. And then I went over to Instagram. I was like, nobody's doing what I do over here. So that's why I started on Instagram. And obviously the response has been pretty good there. So yeah, I want to make sure that my audience definitely follows Michael there. Michael, do me a favor. Please spell out your user handle so people can follow you.
Oh, yeah, sure. Yeah, here we go. Michael G. Lamott. There we go.
Oh, there it is. Comes up on the chat. Okay, perfect. Yes, and my handle for Michael's viewers is 10-minute trading, and that's consistent on all the platforms. It was going to be 10-minute stock trading, but that's too long, so it's 10-minute trading.
At 10-minute trading.
And that's my whole deal is, like Michael was saying, whenever he's talking about his family, I don't want to be spending my entire life in front of 12 monitors, soaking up all that radiation and trying to make, tiny little profits on big trades. I want to put on trades that I know have a high probability of profit and then walk away and just really enjoy life and try and do the best I can with as little time as I can invested into here. So that's where the whole 10-minute stock trading comes from.
Yeah, that's great. That's great. Yeah, and you don't even need to quit your day job to do this.
Oh, not at all. Not at all. Like, you could do everything from your phone these days. Like, I don't think people understand how easy it is to get into stock trading. The hard part's keeping your money. The easy part's getting started.
Yeah, for sure. I was trading for years as a part-time trader. I've only recently took the leap to become a full-time trader and a full-time coach. And I think that I was talking to somebody just the other day about taking the leap to being a full-time trader, and I think that a lot of times people talk themselves out of doing the thing that they truly want to do, that they're very passionate about, and it's that they don't think that it's that they're ready or that they're safe. But I think that it sometimes you need to take the leap in order to do the thing that you're meant to be doing. Like you figure out what it is that you're meant to be doing, and then you take that blind leap of faith, and just like a bird that's standing on the edge of a branch. Like the bird isn't putting its faith in the branch; it's putting its faith in its wings. Like that's what we need to do.
Yeah, that's well said. One of my favorite motivational speakers of all time, his name's Eric Thomas. And you can go on YouTube, type in Eric Thomas, and just let him yell at you for a while. That's what he does. He motivationally yells at people. And one of his quotes is exactly that. It's find what you love to do, and then spend every waking moment for the rest of your life doing that thing. There's no reason to not do it. But if you say, I don't know what I love to do. I had somebody I was talking to the other day who said that. And I said, well, what would you do if someone didn't pay you anything and you were just had some free time? And they're like, I'd go shopping. And I was like, be a personal shopper. Like, you can get paid to follow your dream, no matter if it's collecting Smurfs memorabilia. That's the example Gary Vaynerchuk gives all the time.
Yep.
There's always somebody out there who shares that interest with you and wants to be a part of your community. And, it takes a lot of work, and it also takes a lot of making content too, because people don't know what you're about unless you're putting yourself out there, letting people know what you do. So that's important too. But yeah, I agree. You've got to take the leap. Now be financially secure when you take that leap, but you've got to get started and start with where you are. Start with the tiny little things that you're already doing and just expand upon those. That's what I did.
Yes, and what's interesting too is well, what financial security means to each person,
Hmm.
and one of the things that I thought that it meant was like, okay, I'm going to finally take this leap when I have like 5 years of savings in the bank, for
I love
every
that
single
plan.
expense.
Yeah.
I want to be either at least making my full-time salary or doubling my full-time salary. And that'll be when I make the transition from part-time trader to full-time trader and being all in on my business.
Hmm.
And uh, I was starting to get like frustrated in my day job because I wasn't doing the thing that I knew that I wanted to be doing well, which is this.
Right.
And I went out for a run. I came back, and Mel Robbins happened to be. Do you know who Mel Robbins is?
Yeah, she's is it count to 10 or back from 5 or something like
Yeah,
that?
5 second rule.
That's it. Yeah, yeah.
Yep. And she was doing a live on Instagram, and it was like at 6 in the morning. And normally, like I've never seen her do one at that time. But I get on, and the thing that she's talking about is quitting, right? Like quitting your job. And she said that you know what, like if you don't, like if you're staying in the job that you hate, and you're not going out and pursuing the thing that you love and your dreams, you are quitting. You're quitting on yourself, and that kind of blew my mind right there. And
That's
then
well said.
I'm just like, okay, well, how much savings do you need? And somebody else like asked that question, like how much backup money do you need? And she's like, you need like 3 months. I'm like, 3 months? Like I thought that I need to have like years and years. And she's like, no, like 3 months, because like if you already are kind of like doing the thing and you go all in on the thing and you gain zero traction in 3 months, then maybe it's
Yeah, that makes sense. Like
So
I,
that's
my exit
why
strategy. I actually still work a job. I do credit union consulting. So every day I'm talking to credit unions. I talk to 40 or 50 or so every quarter. And I've been in finance for a decade. Like a lot of people, they get into trading as a hobby or whatever. But I've been in the finance world for a decade. I'm a financial professional, I guess you could say.
Mhm.
But for me, um, when I'm going to be ready to jump, and I discussed this with my wife, I have two little boys, and having that financial security means a lot. Obviously, I got to make sure I can, afford the mortgage and things like that. But as I'm building my business, as I want to have 1 year of income made by the business as a proof of concept. And if I've made enough to equate to my salary, no matter if it takes 6 weeks or 6 years, if I have that in the bank, to me, then I have proved that the concept works and it does pay the bills, and then we're ready to go all in. So that's my particular exit strategy, is having the business build up enough to more than overtake my salary. And really, man, like when you put pen to paper and do numbers, if you have a scalable business, it doesn't take much. I mean, the numbers that I'm looking at are really attainable, and
Mhm.
that you got to be able to find a way to do that too.
Yeah. I agree with that, and I also think that at least for me, in my case, it was more fear based.
Mhm.
Like putting like I want to have like multiple years, and then like, oh, once I hit this certain threshold, then I can. No, it was like for me, it was more about like fear, and uh, like how realistic is it to build a business that's going to generate like how much more times your salary while when you're putting in like just a handful of part-time hours like during the week.
Hey, I get it. Have you read 4 Hour Work Week by Tim Ferriss?
I haven't read that one. I'm like maybe half of the way through Tribe of Mentors.
Oh
Uh,
yeah, yeah.
that one's phenomenal.
Hmm.
Avid listener of his podcast.
Oh,
Have not
good.
read the 4 Hour Work Week yet.
Yeah, I like Tim Ferriss. I like his podcast, but he does everything like in volumes, right? Like all of his books are 600 pages long, and his podcasts are 2 and 3 hours long. Like, I guess we're going to be pushing that one today for us, right?
Yeah, right.
Uh, but yeah, I really like that. A lot of what got me started was was Gary Vaynerchuk. The Success Principles that I mentioned earlier. Make sure to get your free copy by signing up at 10-Minute Stock Trader using the code. Sign up at Tastyworks. Use the code 10-Minute, and I'll send you this book. I'll even autograph it for you if you want.
Amazing.
Yeah, there you go. Yeah, a lot of the stuff like that. I mean, there was a day. I remember this day. I had read books and books and books and books, and I was like, I gotta stop reading and start doing, and just make something happen. And then, it's one of those things where I believe in divine power, and when you're ready, the things just seem to like fall into place. It's crazy how well things work out whenever you're ready to do something.
Sure, the signs are there all the time. Most of the time, we're just walking around with our eyes closed.
Yeah, no doubt.
Yeah, and to that other point too, it's another thing that Gary says all the time. It's like the difference between reading about push-ups and actually doing the push-ups.
There you go. I heard him say that this morning. Yeah, I was listening to him while I was at the gym. So I wasn't doing any push-ups though. It's getting swole.
Very nice.
So Mike,
that you might enjoy if you haven't read it yet is David Goggins' Can't Hurt Me.
I have not read his book. I've seen several of his interviews, but I've not read his book yet. Let me write that down.
I'm consuming that one on Audible, so I have the audio book. He's been my running partner for the past couple of weeks. That book is phenomenal.
I cannot express to people how much I love audiobooks. Driving in the car is the biggest waste of time in the world. But if you could learn something, if you can listen to podcasts, you can listen to audiobooks, it changed your life, man.
Yeah,
I mean, for 100%. Me, there was a time where I had a commute that was 45 or 50 minutes or so, and just listen to books. And then if you go to the library, that place still exists. I don't know if you know this. Mm-hmm. It still exists, and they have just volumes of audiobooks. Take it home, burn it to your computer, put it on your phone. Then you can go into the Apple just Books app or any app you want to where you can listen to your audiobooks. You can play that at different speeds. I don't listen to anything less than 1.5 speed now. Sometimes I do 2 speed, just because like once you get used to it, it's second nature. Like I don't even watch YouTube videos at regular speed now. It's too slow for me. And then like TV, I can't watch TV. It's too slow.
Huh.
Plus my wife picks the TV channels and they're awful. So. Sorry, what were you saying?
Does it sound like the Chipmunks when you're listening to that?
No. It scales it. It sounds decently normal. And most of the time, audiobooks are read really slowly. And then you turn it up to 2, and it's like almost regular people have a conversation. Yeah, you should give it a try.
Yeah, interesting. I think I will.
Yeah, but go to the library because they got tons of books, and they're free. I don't know if you know this. The library is a free thing. You just need a card. You sign up. Your taxes have already paid for it. Burn those on your computer, put them on your phone, which I believe is illegal, and you're good to go. As far as I know, it is. So, yeah. Yeah,
they're giving it for free, and you're just consuming it at another time, and you're not taking it and selling their free stuff.
No, I love audiobooks, though, man. There was one year when I had my long commute, I went through 52 audiobooks in a year. I kept count because I was like, I know I'm going to burn through a bunch of these. So it was about a book a week, just on the commute.
Very interesting.
So I recently connected with Steve Burns.
Okay.
I don't know if you're familiar with him. He's written, I didn't realize this, he's written 20 trading books. And that was one place where I had kind of failed, was I had learned from the internet, but I hadn't really picked up any trading books. When he and I connected, I threw the idea out there of going through each of his books and doing like a book series. And so we're going to have our first one on Monday. We're going to be going over New Trader, Rich Trader. It's kind of spun like Rich Dad, Poor Dad, where there's a new trader and a rich trader, and they go back and forth. But man, I'm looking forward to that. And that book was so eye-opening to me because the trading books I had read really irritated me because they weren't good. Not only were they weren't good, but I felt like they gave me worse advice than I had when I went in. So I kind of shelved trading books for a while. And then I picked up Steve's book and I was like, whoa, this is really good. This is written by somebody who knows what they're talking about. So yeah, the first one of those is on Monday. Really looking forward to that. That book has been fantastic. That's New Trader, Rich Trader. You can find it on like everything. It's on Audible too.
Mm-hmm. I didn't know that it was on Audible. I read that one. I forget how long ago. Back on like a Kindle.
Yeah.
Like, years ago. Great book. The follow up to it is very good too. New Trader, Rich Trader 2.
Oh, I haven't read that one.
And Steve and someone else co-authored a book about options trading. That was like one of the only options trading books that actually made sense to me. It's called Show Me Your Options.
Oh, okay. Well, I'll have to request that he and I do that one next then. That's good. I didn't know that.
Yeah, for sure.
Well, Michael, I've really appreciated the fact that you invited me on for this. This is fun. I'd love to do it again with you sometime. And
it's been great talking to you too.
Let's I mean, the next time we talk, let's go through like topics or strategies or something, so we can really like nail down something that we could use for the podcast and your YouTube channel. How big is your YouTube channel, by the way?
This channel is like brand new. Like there's not many subscribers on it at all. Before I sold Chart Your Trade, I had just eclipsed 1,000 subscribers, and then I sold that whole business in August. So now I'm back with Mara Wealth. I'm back to square one on YouTube. I think I have like maybe 15 or 20 subscribers on YouTube, because I don't post very frequently. Like I'll post these, but my focus isn't YouTube. My big focus is Instagram, Twitter, and StockTwits, and I'm working with the people at StockTwits.
Okay.
Are you on StockTwits?
I'm not. I talked to, is it Ben that works there? He's like one of the, I think he's the president or one of those guys. I feel like it was Ben. I talked to him once about featuring some of my content, but it didn't come through. But no, I don't have an account on StockTwits.
All right.
Yeah, I'd love to. Especially, I mean, my whole deal is I want to get as many people as I can involved in the whole 10-minute trader community, right?
Mm-hmm.
Like, I want the podcast to go as far as possible, YouTube videos, everything like that. And the podcast, man, that thing is really blown up, and I'm so thankful for that. In fact, that AI technology company I was telling you about earlier, they found me because of the podcast, which I had no idea that would happen. So I recommend that for you too, just starting a podcast in some way. And then you could get fancy headphones like this.
Yeah,
these came from Amazon and were $25. Let me tell you.
Goodness.
Yeah. That's, man, I love sharing that kind of stuff, because you don't have to be fancy to do any of this now. The technology has changed the world. Can you imagine the idea that you could reach somebody in South Africa with your content and your videos, right? Like, the concept of that's unreal. If you wanted to do that a decade ago, do you know how much money it would have cost to get in front of that person?
Yeah, insane.
It's crazy. The fact that the podcast reaches, all over the world. I mean, I would have had to spend millions of dollars on a TV show to air it across all the entire world to achieve the same level of exposure that a free podcast gets, that I make with $25 headphones that goes into my phone.
Exactly.
I mean, it is unreal, the ability that we have today because of technology.
Yeah, it's all about freedom.
No doubt. Hey, somebody just popped in a question here.
Yeah.
Can you talk about the psychology involved in trading options? I could talk about that. That's something I've talked about before.
Go for it.
Options are, well, there's two sides of options. There's buying and selling. If you're buying an option, it's essentially a all or nothing bet. Whereas if you buy stock, you have equity in the position. So let's say Michael's going to buy 100 shares of stock for $100, right? He's going to buy stock for $100. If the stock goes down by 5%, he's still got $95, right? He still has that, no doubt. If it goes down 10%, he's still got $90. So he still has value there. Let's say that you, or let's say me, let's say I bought an out of the money call option for at the 102 strike, and I spent the same amount of money. So I spent $1,000, right? If Michael's stock went down by 5%, he's still got $950, or he's still got $900 if it goes down 10%. If the out of the money option that I bought at 102 cost me the same 1,000, and the stock price goes down 5%, I have nothing. at all, like nothing whatsoever. And that's the huge difference with options, is that if you're buying it, it's an all or nothing bet. You either win or you have nothing left. And now, the biggest tip that I could give anybody is to manage size. I like to trade anything that's 1 to 5% of my capital. If you go more than 5% of your capital, you're going to be putting on a lot fewer trades, and each one's going to be mattering a lot more to you. Steve Burns talks about in his book, New Trader, Rich Trader, if you do 1% of your capital, it's essentially like this trade is just one of 100. So I'm not going to worry so much about it. But if this trade is all of your account, you're going to care a lot about it. You're going to lose sleep. I've been there. I remember specifically, I'm kind of embarrassed to tell this story. I remember it was in the first 60 days where I lost 2/3 of my account. I've been very open about that. I was just buying calls like crazy. Market's going to go up, you buy calls. That's how it works. That's not the case. And I just, theta was working against me so hard. Theta being time value. If your option's not in the money, you have theta working against you. And I was just watching my account go down every day. Stock was moving up, but it wasn't moving up fast enough. So I remember laying in bed one night and I was actually praying. I was like, please God, let this come back. Let my money come back. And divine spirits work in mysterious ways. And if that had happened, I probably wouldn't have learned the lessons that I needed to in order to improve my trading. So a lot of the psychology comes down to size. If you can size your trades where they don't mean anything to you, you'll be a lot better off than if you're going really big. I trade smaller now than I ever have, ever. And that's because I have learned going big can equal big risk as much as it can equal big reward. So that's the biggest psychology I could give you is, just stay small and don't let each trade be a part of your life. You want to make money. You don't want to be stuck looking at a screen afraid you're going to lose money. There's two very different things here.
Yes, I agree with the position sizing of that too. If you are trading far bigger than you're comfortable with, that's when a lot of the fears come in, and you'll end up making poor decisions, fear-based decisions. It's very rare that people make good decisions when they're fearful. For me, and this speaks to another question that came in too about managing emotions for new traders too. For me, what I like to do is to examine my beliefs, right? And this is what I recommend to people that I'm coaching as well. Like, start with examining your beliefs, all of your beliefs, the beliefs that you have around trading, beliefs that you have around other things too, because everything tends to be interconnected together. You might think that options are risky, and so you stay away from options, right? Well, where did that belief come from? And then start to go down the rabbit hole about somebody that I respect told me that options were risky and therefore I should stay away from it. Well, why do I respect that person? Starting to construct or deconstruct where the beliefs come from and why. Then start to ask yourself too, well, how does this belief serve me? What does it get me out of? And what does it get me into? Do I want to hang on to this belief? And if I don't want to hang on to this belief, can I let this belief go? Sometimes you'll be able to let the belief go and adopt something much more useful very easily. Sometimes you'll have trouble letting go of that belief because maybe that belief came from a parent, right? Like maybe it came from a teacher or from a mentor that you respect very well, but that particular belief isn't serving you anymore. So then you start to go down that other rabbit hole of well, how do I reconcile that? And it's figuring out a better set of beliefs for yourself and figuring out a way to raise your own beliefs that will help you get to that next spot of you know what? Options could be very profitable. They could give me a much better way to manage risk and generate income. But that other person that I really respect told me that these options are just risky and I should stay away from them. Well, were they trading options? Did they know anything about options? Then like those are some of the things for me that started to release that belief and start to adopt this new belief that, hey, like there's ways that I could trade options. There's ways that I can develop new strategies that other people haven't even considered. So it's going through and trying to figure out what your beliefs are, questioning those beliefs, and going through the whole list. We have like thousands and thousands and thousands of beliefs. So like take some time and figure out what are your beliefs around trading. What are your limiting beliefs? How are they limiting you? What are they getting you into? What are they getting you out of? What can be a better set of beliefs to help you get from where you are now to where you ultimately want to go?
That's profound. Well said.
Thank you.
Yeah, no doubt.
Yeah, I have it written on a wall right behind you.
Oh, man, you cheated. Well, Michael, I'm going to, if it's okay with you, request that we wrap up. And then
Yes.
if you could please send me those files and I'll do some work on them. But, man, I really appreciate that you and I have connected, that we've had some conversations, that I've been able to share some of my experiences with you and learn some of your own. So thank you for that opportunity. I really appreciate it.
Yeah, thank you as well. I appreciate this conversation and all the great value that I received personally, that all the viewers received, and some of those great deals too for Tastyworks, coupon code 10minute, and all the other value that people get from going there and testing out that service as well.
Yeah, you're going to love it. If you don't love it, I'm sorry, but it's one I love, so can't help you too much with that. But yeah, I appreciate it, man. So thank you again so much. I look forward to connecting with you again soon.
All right, man. Take care,
Cool.
brother.
Hey, you too.
Peace
See ya.
out.